Topic A tonight. Stocks say hello to 12,000 again. Yes, they were flat on the day, but they held the high ground even with Egyptian jitters. But the big winners, once again, commodities, food, oil, and raw materials all up again. So is copper, which stands 47% above year ago. Now, the ADP private job survey rose 187,000 for January. That is well above the 150,000 consensus increase for Friday's jobs report. And Obamacare was defeated in the Senate. Obamacare repeal was defeated in the Senate just a few moments ago by a party line vote of 51 Democrats and 47 Republicans. So, in this bull market, which is more important, profits or Egypt? Let's bring in our panel to answer that tough question. Here now is Tommy Belesis, CEO of John Thomas Financial, Lee Munson, Chief Investment Officer, Portfolio Asset Management, and Darryl Jones, Managing Director at Hedgeye Risk Management. Tommy Belesis, let me start with you. Which is more important, Egypt or profits?
I mean, at the end of the day, Larry, it's all about profits. But let's talk about Egypt for a second. I think we have an historic situation happening here throughout the Middle East, similar to when Ronald Reagan was president and told Gorbachev, tear down this wall. The Dow at that time was roughly 2,600. If you look at where we are now, anyone at that time who took this uncertainty in the market and bought into it made an extraordinary amount of money. I mean, both economic and technical trends are pointing one way, and that's to the upside. You know, you have all these economic numbers, like the ISM number came out outstanding. The ADP number, as you just said, Larry, was unbelievable. And more importantly, it showed a pickup in the labor market. Manufacturing grew at the fastest pace in 6 years. I mean, how could you not be bullish right now in the market?
Your answer is profits are more important than Egypt. Is that your basic answer?
Yes, it is.
All right, that's a good answer. I just want to check that in. Let me bring in Darryl Jones with exactly the same question. Profits or Egypt, with a little side table of what Tommy talked about, the incredible surge of manufacturing, which is probably the biggest surprise in this recovery so far. It is by far replacing the housing sector as an economic stimulant. All right, Darryl, how do you see this?
Right. Well, first of all, just to start on Egypt, I don't think we actually know what the consequences of what's happening in the Middle East are. There are a lot of unintended consequences. We're assuming that a change in power will be positive. We don't know that. I mean, if the Muslim Brotherhood takes over in Egypt, will that be a positive for the U.S. or for peace or for oil? I don't think so. As it relates to the ISM and the economy domestically, I think the most interesting takeaway from the ISM was prices paid, a sign of inflation, accelerated from 71 to 80 sequentially. The implication of that is that forward earnings for the S&P could be a lot lower than people expect because of margin contraction. People are expecting that earnings growth is going to be 15% this year. If this price is paid in the ISM continues to accelerate, there's no way we're going to hit that number in earnings.
So are you a seller?
In the short term, we actually were short. We were short the S&P. We took it off just because we're getting out of the way of the U.S. dollar. It's very weak, and that's the primary factor right now. But I have to tell you, we're not a buyer here. The S&P is up 93% from its trough, and things are getting worse, not better.
I mean, come on.
Lee Munson, you're in the middle of this. You got Darryl on the one side. Hang on, Lee. I want to get Tony Belesis on the other side. Lee Munson, I want to ask you a question. It has nothing to do with profits and has more to do with Egypt. What if freedom and democracy and free elections comes to Egypt? We saw this when we, under Reagan, deposed a dictator, Marcos, in the Philippines. We've seen regime changes towards freedom and democracy in Korea, for example. We saw it in Chile, for example, after a transition. Why isn't the stock market thinking maybe this is going to have a better ending? Freedom and democracy is bullish for stocks. I tweeted that, Lee Munson, and I want to ask you about it.
Well, you know what? I came on this show 3 or 4 weeks ago, and I talked about the instability in Middle East, and nobody really thought anything of. And it wasn't that I was scoffed at; it's just that people didn't care. I think that once Egypt goes, we're going to see a whole host of other places like Yemen. I mean, even Albania is going at this point. I think that freedom is going to be great for the stock market. But I'll tell you what. It's not going to be just, bluebirds and lemonade at this point. I think people have to worry about not being in the oil trade. I think that we have an inflation trade right now. I mean, look at the ag stocks right now. They're on fire. And I'll tell you why. If we get more freedom, if we start unlocking people in the Middle East like we unlocked them in China, we're going to have a lot of people wanting to create American-style lifestyles, which involve taking up natural resources that even China is afraid to give up. And I think that it's going to cause the ag stocks. I think it's going to be, we don't even know what's going to happen with energy. And I think we're going to have some inflation. So while I think it's good for stocks, I think that investors need to sit back, relax, and remember, you start getting a lot of people online with freedom and democracy, it takes up a lot of resources. It's going to take up a lot of money. So I think that we need to look at those type of consequences, not just the philosophical debate of should people be free.
All right, so Tommy Belesis, you've heard Darryl and you've heard Lee. They sort of have a little different take. Lee is saying freedom and democracy in Egypt, which might spread, is a good thing, but it's going to raise up commodity prices. As I understand Darryl is worried about commodity prices regardless of the outcome in Egypt as a squeeze on profit margins. What's your response to that?
I agree with a lot of points that, Lee says, but not necessarily what Darryl is saying, and I'll tell you why. I mean, you see a lot of these countries now, right? Commodity prices could rise, yes, but at the end of the day, I think a lot of people are going to be focused on the asset, right? People buy an asset, the value in the stock market. I mean, you're looking at S&P 500 earnings at $96 for 2011. They're expected to go up to 108 in 2012. I mean, Larry, at a PE of just 15, to be ultra conservative, you're talking about an S&P 500 trading at over 1627, which is 25% higher from where we are now. The more exciting thing is you have these countries taking preemptive action to get rid of their governments, like Tunisia and Jordan, and like Lee said, others to follow. So at the end of the day,
the March of Freedom. The March of Freedom.
Absolutely.
And do you think that that's inflation? Are we melting up because of inflation? I mean, I want to know. I want to get your feedback. Do you think this melt up is inflation, or do you think this melt up is just because of that?
We're melting up because the Federal Reserve is too bloody loose in creating dollars. And by the way, it's being joined by the European Central Bank, although Trichet says maybe he'll tighten up sometime in my lifetime, but also China. These big central banks are all too darn loose. But Lee Munson, I think freedom and democracy not only creates consumer demand, it creates business production of the very commodities you're worried about. Freedom works both ways. Economic freedom means the freedom to produce more and innovate and be rewarded for it. And at the same time, it liberates the soul. It liberates the political system. I see it as uniform. I don't know that that's going to happen, Lee. I don't know that, but I'm putting that on a table. Old Reagan guy that I am, I believe in the freedom argument, Lee Munson.
Oh, come on. We're talking about Reaganomics 2.0. So, Larry, if that's the case, then basically if we think this is going to work out in Egypt, Larry, you're basically saying in my hedge fund, I need to press oil, I need to press commodities, because that's going to be the good thing. Because I'm with you on those other topics. Don't sandbag me. You know I'm with you on that stuff. So with that premise, we should be long commodities right now. We should get in it to win it.
All right, Darryl Jones, you've heard this whole discussion. You are worried about inflation. I think you are right to be worried about inflation. We've been debating this on this program all week. We're going to have another debate in the next segment. Is the inflation trade your play, and how do you translate that for investors who are watching?
Yeah, I mean, number one, I think both speakers are suggesting we could see inflation. I mean, we're seeing inflation. Cotton's up 25% year to date. Most commodities in the last 6 months are up between 40 and 100%. Inflation exists, and it's going to continue to exist as long as we debauch the U.S. currency, and we're playing it. We like sugar on the long side. We like certain other soft commodities like wheat and cattle. We're bullish on the inflation trade as long as the U.S. currency gets debauched. But what the inflation trade is going to do is it's going to hurt corporate earnings in the U.S. So you're not going to get this earnings expansion, and I think the earnings growth that people are expecting for the S&P, by the way, which is occurring after a 93% increase in the S&P 500, is not going to happen. So
Darryl, just on the way, I don't mean to interrupt and be at all disrespectful, but regarding these commodities, cotton has soared. Is that reducing margins for retailers, and is that why retailers, which had a phenomenal 2010, are really underperforming here year-to-date 2011?
Yeah, I think that's exactly right. The two sectors we're most bearish on are consumer discretion, the consumer sectors, and they've underperformed the rest of the market year to date. And, the primary reason, especially for the retailers, is that their number one input cost is up 120% in the last 6 months and 25% year to date.
All right, gentlemen, I'm going to leave it there. Tommy Belesis, Lee Munson, Darryl Jones, and Freedom and Democracy. We appreciate it very much.